Good morning, ladies and gentlemen. Welcome to the Canadian automotive industry post-COVID webinar, sponsored by the Fasken Automotive Group. My name is Stephen Rosenhek. I'm chair of that group, and I'm delighted to welcome you to today's webinar. No one could have predicted in January of this year how much the world would change seemingly overnight. As we coast trepidatiously and with great uncertainty into the next phase, which may be the new normal for some time, we know that many industries will change dramatically and will be very different from the way we knew them before COVID. The automotive industry is one of those, and that's our focus for today's webinar. We're fortunate to have a group of presenters from across various practice groups and offices within Fasken. They will offer their insights into what the future holds for the Canadian automotive industry. They'll offer some strategies and solutions to navigate this new risk environment, and they will address some of the legal issues that you will face in this new normal, and hopefully give you some good advice on how to manage the inevitable change. Our presenters today are as follows, in order of their appearance during today's webinar. Ian Campbell is a partner in our Labor, Employment and Human Rights group in the Toronto office. Christopher Steeves is a partner in the tax group and the tax group leader within our Toronto office. Alex Cameron is a partner and a co-leader of the Privacy and Cybersecurity group in the Toronto office. Daniel Brock is a partner and leader of the Government Relations and Strategy group for both our Toronto and our Ottawa offices. Emilie Bundock is a partner in the Global Energy, Mining and Indigenous practice groups from our Montreal office. Paul Burbank is an associate within the Communications Law group in our Ottawa office. And Taleesha Thorogood is a senior business advisor and a member of the Government Relations and Strategy group from our Calgary office. Before we begin, I just want to address a few housekeeping issues. The first is, if you want to ask a question, please insert that question in the chat box. We'll obviously do our best to answer all of the questions that are sent to us. We would like to address those at the end of each segment and at the end of the presentation, at the entire webinar. So we'll hold those questions until those parts of the presentation. If you have any technical questions, please click the tech support button, which is underneath the description on the webinar page. And finally, I just want to remind you that at the end of the webinar, we'll ask you to click on the survey button to complete the webinar survey, because we obviously value your feedback, and that feedback will help us determine the content for webinars in the future. So without further ado, I want to turn it over to Ian Campbell and Alex Cameron. Ian Campbell is going to address the issue of managing your workforce in the age of COVID and afterwards. And Alex is going to deal with issues surrounding privacy and cybersecurity during and after COVID. I'll leave it to Ian to take it away from here.
Thank you, Stephen. So as Stephen has just said, sudden drastic changes were made across Canada in mid-March out of the blue, and required employers to do things that they probably not had to do before. They had to lay off large numbers of people. They had to, in some cases, terminate employees. They also had to take other measures, such as reducing wages and trying to manage their way through measures. And now the start of the reopening process. It's been an incredibly challenging time. And while that initial rush is now over, people are now turning to the question of what do we do next? How are we going to move forward, and what is our business going to look like in the new reality? And so the focus of what I'll be addressing today in the employment and labor section of this webinar will be, what do we do with those people who are still out there on layoff, and how do we manage those people? And as well, how do we manage a successful return to work and the various employee issues that are likely to arise in that context? Now, some of the questions, answers to these questions are going to be situational specific, and so we're going to try and give some general guidelines and advice at a high level, but knowing that you're going to probably need to tweak these based on the specific nature of your operations and your specific circumstances. So if we could pass it through 2 slides, please. When this all occurred, we've sort of started to be governed over the last few months by government by press conference. Each day there's a press conference, and either the Prime Minister or provincial leaders are issuing statements about new benefit plans, programs, closure orders, who's essential, who's not. It's been, it's been a very interesting time with changes happening on almost a daily basis. And so in order to understand the context of the current situation from an employment perspective, we need to start with a brief review of where we stand with respect to certain key benefit programs. So I'll start off with the CERB program. The CERB program is a program that was put in place in late March as a temporary replacement for employment insurance benefits. So whereas before, if an employee lost a job, they would apply for unemployment or employment insurance, the government scrapped that program, put it on hold, and replaced it with a fast-track CERB program, where anybody who lost their employment due to COVID or COVID-related reasons or was unable to work, whether they be an employee or a self-employed or contract worker, was able to apply for flat government benefit that amounted to $2,000 for every 4-week period. There was a fast-track application process that allowed people to fill out a short online form, and then money was being deposited into people's accounts within 3 to 5 business days. This program doesn't have a lot of protections or safeguards in recognition of the fact that the government wanted to get money into people's hands as soon as possible. As initially envisioned, the CERB program was intended to remain in effect through to the end of September of 2020, subject to individual limits of nobody getting more than 16 weeks of benefits for each individual. So if you started at the start, that 16 weeks would have taken you to the beginning of July. If you were laid off or otherwise impacted later, you get a maximum benefit window of 16 weeks through to the end of September. There has been some complaints about the fact that there perhaps are not sufficient safeguards in place, and so the government has been looking at making changes. Unfortunately, they have not been able to get the consent of all the parties in Ottawa to make those changes. So we're starting to see slower and incremental changes being announced, the most recent of which was announced yesterday. And the CERB benefit was extended. So the former 16-week cap is now a 24-week cap. So what this means in practice is that employees who've been on layoff since the start of this whole fiasco in the middle of March will now be eligible to receive ongoing government benefits through to the end of August. And those who received it later will have a maximum benefit window now of 24 weeks. Once an employee has exhausted that benefit, they are then able to transition to regular employment insurance. And so this will have a number of important implications, because we have had some employers who've had challenges bringing people back to work. And that is in part due to the fact that people have been getting these benefits on the side. So having an understanding of how these benefit works can be important and relevant to your return to work strategies. The other key benefit that is worth mentioning at that point is the wage subsidy program. I know Chris is going to get into this in a little more detail in his section of the presentation. I will just say this: if you have not assessed your eligibility for the wage subsidy program, there is still time to do so. Applications can be filed until October. The government is currently in a review process about the requirements for that program as well, and there may be prospective changes announced in the next few weeks. So it's important to keep on top of that, as this has been a very important resource for many employers that has really allowed them to weather the storm, provided they meet the relevant eligibility criteria. So as operations resume, people are having to reassess their workforce. For many people, it has meant recalling employees from layoff. Many people still have large groups of employees who are still not back to work. And so there's a couple important considerations when you're dealing with this group of individuals. Now, the rules regarding how temporary layoffs work and the process you need to follow for bringing them back to work do differ from province to province. And given that the large majority of the automotive sector is provincially regulated for labor and employment purposes, that means that you have to be mindful of the specific provincial requirements in each of the jurisdictions in which you operate. Temporary layoff regime generally provides for an ability for an employer in certain circumstances to lay people off, but only up to a maximum period. And when that maximum period is met, when that threshold is met, the employee is deemed to have been terminated, and that will trigger an entitlement to termination and potentially severance obligations to that employee. It is for this reason that it's particularly important that you're aware of what the applicable temporary layoff requirements are in the various regions in which you're operating, because you want to make sure that you take control of the situation and do not end up in a circumstances where involuntarily employees are deemed to be terminated due to running afoul of these requirements. The other important thing to note is that when somebody who is on layoff is deemed to be terminated, or you terminate somebody on layoff before they return to work, the termination is deemed to have occurred on the date the employee was originally laid off. What we're seeing is that because layoffs generally happened in large numbers and all at the same time, this can result in you being deemed to have terminated a large number of employees all on the same date. And this is relevant for the purposes of certain mass termination or group termination obligations that are provided for in each province's employment standards legislation. So if you engage in what the statute determines to be a mass or group termination, this will significantly increase the notice obligations you owe to the affected workforce and can materially increase your exposure. So it's not only important to look at these on an individual basis, but you want to make sure that you've assessed to what extent any necessary downsizing or restructuring of your operations will trigger mass or group termination exposure, and how you can go about avoiding that if possible. Thresholds for what constitutes a mass or group termination differ from province to province, from as little as 12 in jurisdictions such as Quebec to 50 in many of the other provinces, Ontario West. There are certain geographic restrictions that apply as well. Now, in recognition of the fact that the governments don't believe it's in anybody's best interest to start triggering a large number of mass terminations, we have seen many provinces institute changes to the rules regarding temporary layoff. For example, certain provinces have suspended the time limits for temporary layoffs altogether, whereas others have extended the period over which temporary layoffs can occur before a deemed termination is triggered. So it's important to understand the rules that have applied not just before the pandemic started, but how they've been amended since. A special note regarding two provinces where that have the most significant restrictions currently in place, that being Ontario and Quebec. Quebec hasn't had to go through any changes to their requirements yet, due to the fact that their laws provided for an ability to lay people off for a period of up to 6 months before a termination was triggered, and we're nowhere near that threshold. In Ontario, there has been some significant changes in the last 2 weeks. On May 29th, a new regulation was announced, which basically eliminated the concept of temporary layoffs, at least for during the present state of emergency, and instead has deemed those employees to be on an emergency leave of absence. So it's a statutory leave akin to something like a maternity or pregnancy leave. This has a number of important obligations for employers in that it may complicate your ability to downsize in certain circumstances, and it also provides certain obligations with respect to benefit and service continuance. If and when you are looking at a need to potentially downsize or release employees, terminate employees who will now deem to be off on these leaves, you need to seek advice and make sure that you're doing it in a way that minimizes your risk or exposure. Important changes include the fact that because they will now deem to be off on leave, terminations will be based on the current date, the date you actually let them go, as opposed to being deemed to be retroactive to the start of the limitation period. And service entitlements for the purposes of calculating notice and severance provisions will continue to accrue during the period they are now deemed to be off on leave. These changes and the deemed leave requirements will be in place for the duration of the current state of emergency and for a period of 6 weeks after that state of emergency is lifted. So in terms of just general high-level comments, many people are, most people's businesses don't appear to be going back to exactly what they were before. Some are lucky, and that's the case, but many are going to be changing. And when you're looking at what your needs are in terms of your workforce going forward, it's important that you plan ahead. It's important that in light of the various complicated new rules and requirements that have put in place, that you don't leave this to the last minute, that you have a plan and a process in place that will allow you to achieve your strategic objectives, because it may be something that you need to do slowly over time as opposed to all at once. So think early, plan ahead, and have a plan in place based on what you view the medium to longer term needs of your business to be. And there are a variety of strategies that can be used. What's most appropriate is very circumstance specific, but we have been working with many employers to try and come up with strategies that both retain their talent pool while also managing exposure and costs to the greatest extent possible. Turning now to, on the next slide, to maybe one more slide ahead, please. You're already going through the process of returning people to the workplace. You've probably already started to deal with all of the headaches associated with doing that safely and in compliance with all the local directives. But just a couple quick points on that in terms of employee issues that we've seen coming up. First, some people are getting confused about what they're allowed to do and when they're allowed to do it. You need to determine the status of what you are and are not allowed to do based on the applicable emergency regulations applying to each location where you have operations. The requirements in Toronto are now different than they are in other parts of Ontario. What's applicable in Alberta is different from what's applicable in New Brunswick, Nova Scotia, or the like. So just be mindful of that. You've probably already had to do a lot of the reconfiguration work that was associated with reconfirming to the workforce, but if you haven't fully implemented that yet, you need to be mindful of the nature of the reorganization that's going to need to be done to workplace configurations to ensure appropriate social distancing. You're going to need to determine what measures you need to put in place to ensure that social distancing is occurring and physical distancing is occurring in your workplace to the greatest extent possible. That may require, reconfiguration of workstations, limiting the number of people that will be allowed in any one place, along with, provisions, especially in common areas. That has been a common area of concern where there have been issues and where we have seen outbreaks in some workplaces. The largest culprit of them have been common areas like changing rooms, like lunch rooms, meeting rooms. And so it's especially important to focus on that. And obviously for your customer interactions, you need to have clear and established protocols in place, and you need to make sure that your employees are trained on it. PPE has also been an issue, especially due to its lack of availability. That again is circumstance specific. Employers are taking very different tacks on that. The most common issue we've seen coming up is masks and employees' refusal in some cases to wear masks where they're being mandated by an employer. Employers do have the ability to institute measures to ensure the safe and well-being of their workforce, and in certain circumstances they do have the right to impose and require employees to don masks if that's what the employer's policy is, if it's necessary for that purpose. But navigating certain concerns in that regard, especially as it relates to accommodation of religious or other issues, has been something that's come up and needs to be dealt with carefully. Specifically to your workforce, next slide, please. When you're bringing people back to work and admitting them into the workplace, a number of things you want to keep in mind. Many employers, and I think most would consider it to be a best practice, have implemented processes whereby employers are required to certify each and every time they come to work that they're healthy, that they don't have any symptoms, and that they also haven't been in contact with anybody who's tested positive or has symptoms that could be symptomatic of COVID. Most employers are doing this through health screening forms, and so if you haven't done that already, that may be something you want to look at. Illness and absent management has been a challenge. In a world where you're telling people, don't come to work if you're sick or having symptoms, employees are often saying, well, I've got to come to work because I need the money. And there's a tension between trying to ensure a safe workplace by not having sick people in it and dealing with people who may have symptoms. And so many employers have had to look at their absence management, how they deal with sick time, what entitlements are paid and what entitlements are unpaid, to determine the strategy that's best for them in order to appropriately balance these various competing interests and come up with a solution that's right for their business. And many people are doing this in mind that while there may be additional cost in some of these areas, that is a much preferable outcome than the alternative, which could be an outbreak in the workplace and further disruption to the business. Allowing for remote work where feasible is a strategy that many politicians are suggesting. It makes good sense where appropriate, as well as rotating start and end times, anything possible to limit contact and reduce overlap between employee populations. So the last thing I'll address before, and this is where I'll introduce Alex and turn it over to him, is as it relates to new measures. A lot of employers are asking about COVID-specific measures, like can we require COVID testing, and can we require measures like temperature screening as a condition to allowing admittance to the workforce? And these are complicated questions that engage both employment law principles as well as privacy. Prior to the pandemic, these would have been clear no-go areas from an employment perspective. There would be concerns that these represent invasive testing and collecting of personal information. It would have been very difficult to justify, save for in exceptional circumstances. We have, however, seen a softening of this. In the United States, there has been clear guidance given that temperature screening is appropriate in certain circumstances, and this has resulted in many multinationals sort of mandating this as part of their return to work protocol across jurisdictions, including in Canada. We have seen an increasing number of Canadian employers implement temperature screening. Testing is not something that we've seen to date and would be much more difficult to justify. But provided the temperature screening is done in a reasonable way that takes into account employees' privacy interests, it is something that is likely going to be permissible in many circumstances. But it is advisable to have a clear policy setting out how this will be done and how the information collected through this process will be stored to mitigate any risk of potential claims from employees. And so with that, maybe I'll turn it over to Alex to comment on that and then take us through some other employee privacy issues and some cybersecurity risks.
Great, thanks, Ian. So as Ian alluded to, some of the return to work measures certainly have been a focus from a privacy perspective and very consistent with Ian's comments. If done in the right way, temperature screening has certainly been a practice that from a privacy perspective has been acceptable, depending on how it's implemented. Although that is something that does continue to need to be tracked, and we'll have to see on an ongoing basis the efficacy of that as a measure to help ensure a safe workplace, because part of the privacy equation really does depend on both not only the necessity but the efficacy of the measure, and whether there may be other measures that are less invasive that would help achieve the same objective. So it's something that needs to be considered on an ongoing basis as we learn more and practices continue to evolve, but certainly it's part of the mix. In terms of what the regulators have been doing in this area, I wanted to just touch on that. We haven't actually seen a lot of very specific privacy commissioner activity in respect of COVID outside of obvious focus around government initiatives in respect of contact tracing, of course, and some very high-level guidance that has been issued predominantly geared towards federal government and other provincial governments in terms of their initiatives that may implicate privacy issues in respect of COVID. But a lot of those general guidance documents also, of course, have applicability in terms of setting out a framework or practices to consider for the private sector. And but it's not very specific. So they of course highlight specific things that are already an existing part of the privacy frameworks in terms of identifying purposes, limiting the amount of information that's being collected, not retaining it for longer than you need it. So if you've achieved your COVID-related objective, you should be asking whether we need to keep the information any further. Those sorts of pretty high-level types of guidance. So beyond that, we haven't seen a lot to date, and nor am I aware of any particular privacy complaints or investigations that have been launched in respect of these types of things. I think in part a reflection that there is a widespread recognition that a lot of the measures that have been implemented are reasonable and necessary, provided they're, again, done in the appropriate way, and so that people understand that these are things that just have to occur, and privacy to some extent must give way to broader objectives around safety and public health. The one additional topic, though, that has come more onto the radar in terms of the post-COVID environment is remote work monitoring. So you have both the issues of privacy in the workplace and temperature screening and other measures, but also the reality that, of course, there may be an increased proportion of the workforce that is working remotely, and questions have emerged about how you can go about monitoring productivity, ensure that employees are doing their jobs, which can introduce, of course, a whole range of privacy issues. And in general, sort of 24/7 monitoring of employee conduct is likely going to raise some problems on a privacy side, where you're monitoring employees. But there may be other metrics that could be utilized to try to track performance. You just have to be very careful about the technologies that you're using in terms of what the capabilities are, and be very careful in doing an assessment of what the objectives are, having a policy and being transparent about it if you're going to embark on that sort of initiative. So doable in many cases, but you do need to be careful about how you go about that. With that, I'll move to the next slide. So in terms of some other developments that are going to be a part of the post-COVID landscape, the first that I have here is, and these are not unique to the auto sector, but certainly are going to have impacts in there as in other industries. The Competition Bureau for a number of years has been inching into the privacy sphere in respect of concerns around big data and analytics and the competitive implications of big companies that hold a lot of data. But in addition to that, have jurisdiction in respect of false and misleading representations. And so for many years in the US, that has, by and large been the approach to privacy regulation, is to go through the kind of consumer lens of looking at what companies represent to individuals in their privacy policies and other documents, and hold them accountable to the promises that they make to people. To date in Canada, that has not been a significant focus, but just in the recent years, and then just recently in the last few weeks, we had a major announcement of a very significant penalty that involved allegations in respect of false and misleading privacy claims. So, what your company represents to individuals, and we're not talking about employees necessarily. These are consumers, of course, predominantly. And if those representations are misleading or false, then the new reality is that there could be a significant competition side penalty that could be associated with that type of practice. So the usual sort of lighter treatment that you might get from a privacy regulator has really evolved into a much more significant and material risk, given that you may now also face a proceeding with the Competition Bureau. Those types of representations also can create contract-based exposures for companies, and we see this quite often when you've had privacy breaches, or even just ordinary course business usage of information that is alleged to be in violation of the representations that were made to people in your privacy policy, as forming a breach of contract claim, which is quite a potentially significant exposure. And so for many years, we have been working with clients to take a red pen to things in a privacy policy that are specific promises that you simply do not need to make. Those policies should not be out there creating exposures for you. They should be the shield that you're relying on to show consent and other things. But I highlight the new development of the Competition Bureau because that's potentially millions of dollars at stake in penalties under that regime. Just in the last number of days, on the second bullet here, Quebec has introduced very significant amendments to their private sector privacy law. which will potentially completely change the landscape in Canada in terms of privacy risk, because we have power to levy monetary fines and penalties. We have a private right of action. We have new provisions in respect of breach reporting and breach notification, new provisions in respect of consent, all largely geared towards bringing Quebec closer to the EU GDPR mode of regulating privacy, which is a lot more onerous and carries a lot more risk in terms of any violations. That is, to be monitored closely, of course. And then the last bullet is very similar amendments to PIPEDA, which had been on the agenda to be brought into force likely this year. We had expected to see that in the spring, but of course things took a different turn. The government has different priorities now. However, there is a real question as to when we're going to see those similar amendments to what Quebec has done under PIPEDA that could come anytime. You might think the government isn't looking to do things that would be more onerous for business at this particular time, that would increase costs and compliance obligations, and they want people to get back on their feet first. However, there is some pressure for Canada to get in line with the EU in respect of those issues, and so we may well see that Canada will move, as Quebec has done, towards increased privacy protections and greater penalties for non-compliance. So developments to be monitored for sure. And with respect to Quebec in particular, I can say that certainly after the Desjardins incident, that there seemed to be quite a shift there in Quebec, and that was seemingly a bit of a catalyst for these changes. And so we'll see how quickly the government seeks to move those changes through. We could go to the next slide, please. So on the cybersecurity side, just to spend a few minutes on that. Certainly we saw actually quite a quiet period for some time in March as everybody was moving towards remote work arrangements, and there was a bit of pause on things. Since then, however, and this was widely anticipated by a lot of the security community, there has been an absolute onslaught of cyber attacks in the last couple of months. And that in part is related to remote work arrangements. So the speed at which remote work arrangements were set up was really unprecedented. And there are definite cases, and we've seen many of these, where the usual types of controls and checks that might have been put in place simply weren't done. And so that has led to doors being left open for attackers to figure out ways to get into companies and to cause a lot of damage in some cases. So a lot of activity on the cybersecurity side because of that. The phishing risk obviously predated COVID. There have been a number of reports in relation to COVID-specific phishing initiatives, but the risk is there regardless. It's just a different type of phishing. But there's absolutely a connection between that activity and what's occurred, in the sense that with employees being presented with all sorts of new services, your video conferencing service and other applications that were new to them as we moved into a much greater remote workforce, people were just clicking "I agree" and kind of moving through things, whether it was presented by their company or others that they were interacting with. And that led to a lot of infections in companies where employees were leading to click on attachments that brought in malware, or where they handed over credentials. And so it's reinforced that, again, what should be in place in any event, but a very kind of concerted focus on the need for training around those issues, and of course the technical security considerations as well. And then finally, the third party risk. So as providers had been brought in with companies scrambling to get workarounds and remote work arrangements, a lot of third parties were engaged for that purpose. And again, not necessarily with the usual kind of vetting that you might want to see, or with the usual contracts, just because of the need for expediency. So there is now a renewed focus, as things have become somewhat calmer, to take a second look at those and make sure that there are not issues that have arisen in respect of those arrangements that are creating risks for companies. With that, I'll just make one final comment, just in reference to the screen snippet here over on this slide, which refers to the Maze ransomware, because in the cybersecurity landscape, you may have heard of ransomware, of course, which effectively traditionally has been a malware program which, when the company's infected, it would encrypt data and make it inaccessible to the company, and then prevent the company from operating in a lot of cases if they couldn't work around it or restore their operation from backup. Most of the time, those types of cases historically have not involved a privacy breach or theft of data. So the attacker simply would get in and encrypt data and seek to get paid to provide the keys so that you could unlock the data. The new model, and the Maze Group is the first to do this in the last number of months, and it is now being a model that is being adopted by other ransomware groups, is to also steal data, which is a very significant development, both in terms of potential privacy breach risk, but also theft of intellectual property, confidential information, and business information. And what they're doing is they're infecting with ransomware, but also stealing the data and threatening to publish the data unless the company pays the extortion amount. So if that's not on your radar already, it has definitely increased the risk, the publicity and reputational impacts and litigation risk that can be associated with ransomware attacks quite significantly. So certainly something to be mindful of as we move forward into the post-COVID environment, because that seems to be part of what's here to stay. With that, I'll hand it back to you, Stephen.
Thank you very much. Thank you, Ian. Thank you, Alex. I just want to address a question that's come in, perhaps to you, Ian. Question is, for an Ontario employer situation, can a company use a combination of laying off some staff so that they can collect the CERB benefit, and the remaining staff use the CEWS benefit?
The answer to that question is yes, Stephen. The eligibility requirements of those two programs are individual based. So provided the company meets the eligibility requisites for the wage subsidy program, they can claim a subsidy based on the people who are working for them and they're paying directly. The fact they also have some employees who are on layoff and not receiving any money just means they can't file a claim in respect to those individuals, and their entitlements will be determined based on their own personal applications for CERB. What you can't have is an employee claiming CRB and an employer claiming wage subsidy in respect of the same period. So the two programs, the benefit windows, have been synced up, and so you either have to be under one or the other. And so it's up to the employee, if they've claimed CERB, to necessarily report the fact they've gone back to work, and that may trigger a repayment obligation. But from an employer perspective, it's based on who's at work and who you're paying during the benefit windows, and then you have to follow the rules about calculating what percentage of what you're paying them is subsidy eligible.
Thanks, Ian. I just remind everyone that if you want to address a question to any of the panelists, please use the chat box on your screen, and we'll try to address all of the questions if we're able to, and if not, as many as we possibly can. Thanks, both of you, for your presentation. I just want to now turn it over to Chris Steeves, who will address practical tax planning considerations. Chris, over to you.
Thanks, Stephen, and hello, everybody. Thanks again for joining us. I always hate following Alex in a presentation because, as exciting as tax is, it can't compete with extortion and ransomware and all these great topics that Alex was presenting about. So as Stephen said, the subject I will be presenting today is practical tax planning to consider during troubled economic times. And my presentation can be divided into two main parts. First, I'm going to talk about tax relief that has been offered by governments in Canada for businesses in response to the COVID-19 pandemic. And then second, I'm going to talk about some tax planning ideas to consider now that we appear to be entering into an economically challenging period. Nothing too technical, just some high-level ideas to think about that could be relevant to your business or organization in the coming days. So for the first part, talking about tax relief measures, we've seen a lot of different programs rolled out by the federal government and by the provinces. And on this slide, we go through some of the federal tax relief that has been introduced over the last few months. The federal government and the CRA adopted these measures that are listed on this slide. The big one for individuals, of course, was that instead of having the usual April 30 deadline to file your tax returns, it was extended to June 1st, which is now passed. For corporations, if you had a tax filing deadline between March 18th and May 31st, you also had an extension to June 1st. And for those corporations, and in cases where a corporation has a calendar year end, for example, their tax return is due June 30th, well, any corporation with a tax filing deadline on May 31st or in June, July, or August of this year, they now have an extension to September 1st, 2020. Any income taxes due on or after March 18th, including tax installments for either individuals or corporations, are now due by September 1st, 2020. And there's been a suspension of all CRA collection and audit activities as a result of the COVID-19 pandemic. And for those taxpayers that filed notices of objection in relation to the completion of an audit by CRA, there's been an extension given for those objections. If they've fallen into the pandemic period since March 15th, they have an extension until June 30th. Next slide, please. And so continue with some federal tax relief. A big number for a lot of businesses is the relief that's being offered on the GST and customs side. The federal government announced that a deferral of GST and HST remittance deadline to June 30th. So that's coming up. And for those businesses who've been taking advantage of that deferral, they should be ready to make their payment on June 30. Similarly, there's been a deferral of all customs duties payments to that same date, June 30. Now, while the CRA has been asking businesses to continue to file their regular GST and HST returns, they have offered not to impose penalties if you don't file, as long as you file by June 30th. Like income tax, for GST and HST purposes, there's been a suspension of collection and audit activities by the CRA, and they've also provided an extension of the objection filing deadline until June 30. Next slide, please. So on the provincial side, this particular slide goes through some of the highlights of things that we've seen. The big relief measures relate to sales taxes and EHT, or employer health tax. In BC, there's been a deferral of the deadline for remitting provincial sales tax and EHT and all the returns for those taxes to September 30, 2020. In Ontario, there have been penalty and interest relief measures brought in for taxpayers that miss a filing or remittance deadline in respect of their employer health tax, or certain RST on insurance contracts and benefit plans. And that relief goes until September 1st. And there's also been a very helpful increase of annual EHT exemption that has been increased from $490,000 to $1 million for eligible employers who have annual payrolls of up to $5 million. And that applies for this calendar year. And then finally, on this slide, Quebec has announced a deferral for the deadline for remitting net QST and installments related tax returns that were otherwise due between March 27th and June 1st until June 30th. And there's no QST filing extension, but similarly, they do provide late filing penalty relief as the federal government has done. Next slide, please. So as Ian mentioned in his presentation, one of the big areas that's been a huge success for businesses who have been heavily impacted by the COVID-19 pandemic is the Canada Emergency Wage Subsidy. And this is one of the largest COVID-19 relief measures offered by the federal government. And for the original 12-week program, it was estimated to cost about $73 billion. And this relief provides a monthly subsidy of up to 75% of the salary, wages, or other remuneration paid by eligible employers, up to a maximum of $847 per week per employee for the 3-month period from March 15th to June 6th. Last month, the Minister of Finance announced that there would be a 12-month extension. This would take it to August 29th, 2020, as Ian mentioned. But details are yet to be confirmed, including the amount of any required revenue drop. So we're expecting some more details this month on that issue. But right now, it's unclear as to what the changes to the program will include. There were some other announced changes. They were actually part of a bill that was announced last week, but currently doesn't have support, the necessary support from the other parties in the House of Commons. These changes include providing flexibility for employers of existing employees who were not regularly employed in early 2020, such as seasonal employees, and also has special rules dealing with corporations that were amalgamated. So those changes have found their way into the bill, but it's not clear when and if that bill will be enacted into law. Next slide, please. And so a couple of words of caution here. You know, a lot of people aren't aware that the wage subsidy was brought in as a program under the Income Tax Act. And obviously, it's a very complex tax statute that's administered by the CRA. And these various claims are being evaluated by over 3,000 CRA auditors. And so the word of caution is that post-pandemic, when the dust has settled, the economy is starting to rev again, we expect those 3,000 auditors to switch from approving applications to auditing those applications to making sure that they were properly filed and claims were appropriate. I think you can expect that audit process will be vigorous, that there are certain anti-avoidance rules in the Income Tax Act that could be employed, and that in situations where employers were not qualified for claims that they made, they will be subject to repaying those amounts received and possibly penalties where the claims are found to be incorrect. And so my advice to all employers who are making claims for wage subsidy is to really keep good records. Keep the files that you relied on to show what your computations were relative to your revenue drop, but also what your employees' base salaries were during the relevant periods. Next slide, please. So I'm going to change gears now and talk about some tax planning considerations. You know, I think now that we're seeing a lot of people going back to work and businesses getting back on their feet, we get a lot of questions from our clients as to what the climate is going to look like from a tax perspective. With all of these lucrative and expensive tax programs that are being offered to employers and to citizens who are out of work, you've got to ask yourself, how is the government going to pay for these things? And I guess if I was going to look in my crystal ball, I'd say that there's really two potential issues or potential changes to our fiscal policy in Canada that's going to come as a result of these huge social program payments. The first is, I think that we're going to see an increase in the rate of GST and HST. And I think that has already been floated. The government has not commented on that yet. They're waiting for things to kind of progress within the economy. But I think there's a high likelihood that we're going to see an increase in the rate of GST and HST. And the other area where I think we're going to see some change is an increase in the capital gains inclusion rate. Currently in Canada, there is a 50% inclusion rate for capital gains. In other words, when you realize a capital gain, you only include 50% of that in computing your income for tax purposes. It hasn't always been 50%. There was a period not that long ago where it was a 75% inclusion rate. And so I think that as the dust settles and the government is looking at ways of clawing back some tax revenue in order to pay for these social programs, that I think that the capital gains rate is something that is likely to change. And if I could get the next slide, please. So in anticipation of that, as a result of the COVID-19 crisis, a lot of asset values in businesses have dropped. Next slide, please. And that can create at least some tax planning considerations. And the first thing is for a business that is considering selling off some capital property in the near future, they might want to consider doing some kind of internal reorganization to trigger that capital gain now in order to take advantage of the current 50% inclusion rate. When the government does get around to changing the tax law and increases that inclusion rate, they may actually have some savings as a result. And just a news flash for those of you who haven't been watching today's press conference from the Prime Minister. He announced that the federal government will be delivering a snapshot of the government finances in the House of Commons on July 8th. So it doesn't sound like we're going to have a budget anytime soon, and that's normally when we see changes to tax policy. But those changes are coming. So this idea of triggering some capital gains today before rates are changed is something to consider. And I wouldn't say in all cases, but if there is a planned disposition in the near future, it might be a good way to hedge against potential increase in those rates. Next slide, please. So on this slide, next slide, please. You'll see a bunch of different ways that corporate groups can consolidate their losses. And the reason why that's necessary in Canada is that we don't have consolidated tax returns. So every corporation in a corporate group is treated as its own separate taxpayer. It files its own separate tax returns. And there's no mechanism in place that allows the losses, the tax losses in one corporate entity to be transferred to another corporate entity within the same group. And so I'm not going to go through all of these. I'm going to touch on a few of them. If you go to the next slide, please. So here's an example of one of the things that tax lawyers use as a mechanism to shift profits from a profitable tax-paying entity, ProfitCo on this slide, to a company that has tax loss carry-forwards. That's LossCo on this slide. And by following the numbered steps shown on this slide, at the end of the day, you have ProfitCo that is paying tax-deductible interest to LossCo, which creates income in LossCo and creates deductions in ProfitCo, effectively shifting the profits to the LossCo and thereby utilizing those loss carry-forwards. And then the money can be circled back to ProfitCo through intercorporate dividends, which can be paid tax-free. Next slide, please. Another way of doing this is using an amalgamation or wind-up within a parent group. And this slide illustrates how that happens, where you have a subsidiary with loss carry-forwards and a parent company that has profits. By either winding up the loss company or amalgamating them, you're able to combine those losses with those profits for tax purposes and reduce your tax burden within the corporate group. And I've listed on the right-hand side of this slide different aspects that are considered when choosing which is more preferred, amalgamation or a winding up. Next slide, please. And so another way to kind of deal with this issue and consolidate losses within a group is to transfer property. Sometimes if you have an asset that has a pregnant gain, you can trigger that gain by transferring it within the corporate group, and you can effectively shift the income in that manner. You can also enter into intercompany rollover and leaseback transactions. And also you can transfer a profitable business to a loss company so that the future profits from that business are offset with the loss carry forwards from that loss company. And then the easiest way to do that when the losses are not that significant is you can use intra-group fees, and there's certain limitations on that. Generally, you want those fees to represent what an arm's length third party might charge for those types of goods or services or fees. And so that's another easy way to shift losses within a corporate group. Next slide, please. So I want to say a few words about liquidity planning. And this is something where obviously when you have a large corporate group operating in Canada, you can have situations, especially when it's part of a multinational group, where you may have cash in one jurisdiction and have some expenses that are required in another jurisdiction. And you want to move money within the corporate group. Next slide, please. And this slide sort of sets out what some of the things to watch out for are. When you're moving money around a Canadian corporate group where all of the members of the corporate group are in Canada, it's pretty easy to accomplish this without triggering negative tax consequences, as Canadian companies can generally lend money to each other on an interest-free basis. However, you need to be more careful where non-residents are involved. And there's 4 bullets on this slide that illustrate how tax problems can arise. This is sort of traps to watch out for. So for example, if a Canadian company lends money to a non-resident affiliate within its multinational group, they have to worry about charging arm's length interest. And there are specific rules that will apply if an arm's length interest rate is not charged. Similarly, loans to Canadian companies by non-resident shareholders have to respect Canada's thin capitalization rules. Generally, that requires that a Canadian company who borrows money from certain related non-residents maintains a 1.5 to 1 debt to equity ratio. And if the debt that they borrow from related non-residents exceeds that 1.5 to 1 debt to equity ratio, the interest on that excess debt is not deductible by the Canadian company and can be treated as a deemed dividend subject to Canadian withholding tax. In the third bullet here, I remind people that loans to Canadian companies by non-resident subsidiaries have to be paid within 2 years under Canada's upstream loan rules. And finally, loans by Canadian companies to non-resident shareholders must be repaid by a year following the end of the year in which the loan is made, or they will be deemed to be, the entire principal amount is deemed to be a dividend subject to Canadian non-resident withholding tax. And next slide, please. So those are my comments today. I hope you didn't find that too heavy. No sexy blackmail in my presentation, but Stephen, I turn it over back to you.
I was going to say blackmail or not, sexy or not, still very interesting. Chris, thanks very much. We're going to end our webinar with a foray into the area of government relations and strategy. This is going to be a somewhat of a discussion or panel discussion moderated by Dan Brock. So it will include Dan Brock, Emilie, Bundock, Taleesha Thorogood, and Paul Burbank, who are going to address the issue of Canadian government decision-making in the age of COVID-19. I'll leave it to Dan to take it away. Thanks, Dan.
Thanks, Stephen, and thanks to everyone for joining us today. It's a pleasure to be here with you and with my colleagues. Note of warning at the beginning of the presentation, I notified my 5-year-old and 8-year-old that Daddy was going to be on an important call and should not be bothered. So I think I've just increased the possibility that I will be co-presenting with one or both of my kids at some point during the presentation, but I think we can manage that. We'll just move along. As Stephen mentioned, I'm doing this presentation, and it's really a panel discussion. We thought it would be interesting for you, hopefully for you, to talk about, the COVID-19, the pandemic obviously dramatically impacted our personal lives, our businesses, but of course obviously impacted governments and the way they function and what they've been doing and trying to do to navigate our society through the pandemic. For each of Emilie and Taleesha and Paul and I, our practice is largely to work with our clients to engage with government. We spend a lot of time thinking about working through issues related to governments. And so we thought maybe it would be, to change it up a little bit, have a bit of a discussion among the 4 of us about the pandemic at a high level. Obviously, when it occurred, and I'm reminded we're now into, I think, roughly week 14, at least for me. My last day in the office was Friday, March 13th. I think when I was leaving, I didn't appreciate it was going to be my last day in the office for for 14 weeks, but there it is. And so when that happened, when that initial, sort of end of March took place, it really was a dramatic pivot. The government had to, in an important way, pivot to a deal with the pandemic, to figure out how the government was going to address the pandemic. And of course, there were dramatic decisions taken, and we're going to cover a little bit of that in our presentation. We wanted to talk as well about how the pivot, if you call it that, has really changed the way governments are making decisions in Canada. And then we wanted to finish up with sort of trying to think about what this means going forward, sort of medium and longer term. How dramatic are these changes? What impact will they have on Canadians, and on our businesses? So that's essentially the panel discussion that we're going to have. And of course, Emilie is based in our Montreal office and spends a lot of time with the government of Quebec. Taleesha is based in Calgary and spends a lot of time with the Alberta government, but also her practice involves engagement with other governments, including Ontario. So we've asked Taleesha to do double duty this morning. And Paul Burbank, who's based in Ottawa, and for whom a lot of his practice involves federal government interactions. Before we move to the panel discussion, I just want to say my elevator pitch, but it's not a pitch. It really is a way of framing what government relations is. I mean, many of you on this call do government relations or have some exposure to government relations. Perhaps some of you are our clients and work with us on issues related to government. And the way I like to describe government relations as a discipline is really about, we work with our clients to manage and to help, bridge the relationship between them as typically business interests and government decision makers by developing strategies that will help companies mitigate risk where you have exposure to a government decision that could adversely affect your business. What are you going to do? What can you do to try to mitigate the negative impacts of that, perhaps persuade a government to reverse a decision or not to make a decision that's going to hurt your business, or exploit opportunity. Perhaps you need or would like the government to do something that would be beneficial to you. And so engaging with government, figuring out how to engage with government, and whether to do so on your own or as part of an association or as part of a coalition, and how best to advance your interests with government. That's what we do. That's what our practice is all about. And the four of us together in different ways advise our clients and work with our clients on managing that exposure. So with that, let's shift now to the discussion about COVID-19 and how it's changed, certainly the way we do work, but also for those of you who do engage with government on a regular basis, how it's affected you as well. And I think I'll start with Paul Burbank. So Paul, thank you for joining the discussion this morning. And it was occurred to me, do you know what your last day in the office was?
Yeah, it's interesting that you started this by reminiscing about your last day in the office, because maybe this is just me being a little naive, but I had one of the most inauspicious starts to this lockdown as anybody. 2 days prior to my last day in the office, I had returned on an airplane from Toronto from the Prospectors Developers Association of Canada, international conference, international mining conference that brings people together from all corners of the globe. And 2 days later, the exact day that I had my last day in the office, I didn't realize it at the time, but news was breaking that the first coronavirus case, sort of well-known publicly in Ontario, was an individual from Northwestern Ontario who had just returned from PDAC, the PDAC conference. So even at that time, it didn't necessarily register with me sort of what was about to follow, but I knew that this was not a good start to it, whatever that would be. And I guess—
Now, I was going to say, so what, but we know, I think most of us know, but Ramon, take us back, just painfully though, maybe take us back to, like, it was a dramatic early days for the federal government in managing the pandemic. Things change in a radical way. Would you agree? Immediately. So the federal government had to sort of, if we're talking about in terms of a pivot, had to sort of pivot to a strategy of comprehensive containment, the way I see it. And the very first thing that they had to do was sort of introduce a strategy of physical containment. So the very first part of that was that they had to repatriate many Canadians who were abroad. Many Canadians at that time were thinking about traveling on spring break. I mean, this was the beginning of March. People had all these great ideas. You had millions of expats abroad, and the federal government knew
that as soon as this was hitting, if you didn't get those individuals back and keep them within Canada, you were going to have a major, major crisis going forward. And then they followed that up with various sort of other physical containment efforts, like using the Quarantine Act to keep individuals physically attached to their places of residence, using the Aeronautics Act and other legislative authorities to keep people from going on airplanes and traveling across the country and spreading this virus when we didn't know where it was at that time. But most importantly, and there was some debate about this at the time, whether the federal government acted fast enough, but setting that aside, they acted relatively quickly to restrict recreational or non-essential travel between Canada and the United States across the border. And to go back to my last couple of days, I had designs to go travel to the United States in April and May for a variety of reasons. And, it was just going through my head that I'll be on those airplane trips. Well, I still have the Porter credit. And it was just announced the other day that the border remains closed until July 21st.
Right.
So, at that time, no idea how sort of extensive and how far-reaching it would be.
Now, Emilie, as I recall, the government of Quebec was one of the governments that acted more quickly and more dramatically. I mean, I appreciate that there was sort of some coordination between Quebec and Ontario, but I think the Premier of Quebec and the Quebec government really did. They took decisive action. It looked, certainly from the outside. What was your experience when those decisions started?
Yeah, well, I would say that probably what was more shocking in Quebec or more surprising is the level to which our businesses, our economy was actually shut down. So by March 25th, literally all businesses or all activities in work environments were suspended for basically an indefinite period of time. So that included, for example, manufacturing activities that were not allowed to reopen until May. And even in May, there were two phases. So the first phase was only at 50%, and then it ramped up back at the end of the month. But so manufacturing, everything close to anything that the public had access to was also shut down. So I think Quebec was by far the most aggressive in terms of measures to suspend all activities, economic activities.
Yeah, and our viewers will know this probably better than us, but obviously for the automotive industry writ large, that had a direct and immediate impact in Quebec.
Absolutely, because the manufacturing of auto parts in Quebec is a big part. It's a big crunch. There's also the activities of car dealerships that were suspended. Of course, because of online sales, someone would say, well, they could have sold cars online, but there are some provisions that I won't get into the details, but there are some provisions of the Consumer Protection Act that actually much restrict the ability of selling cars online in Quebec. And there's also the fact that mechanical repairs were also restricted in the first period, the first closure period, to only businesses that were into the priority services or people that needed a car to, for example, work at the hospital and they needed to get into car mechanical repairs. So
right.
Only those activities were maintained.
Right. Now, Taleesha, as I recall, the government of let's start with Alberta. We'll do quickly Alberta and then talk about Ontario. But the government of Alberta had its hands full before COVID with the collapsing oil price and other related issues. And then COVID hit. It's like a 2-for-1, if you will, set of problems to deal with. What was it like for the Alberta government? What was your experience in following them and interacting with them?
Yeah, absolutely. Thanks, Dan. So the government enacted their state of emergency on March 15th. And as you mentioned, a lot of people have actually referred to it almost as a triple storm. So we already had the economy was quite crippled, and then you added the OPEC price war, and then we had COVID on top of that. And so the government really had to act quickly and change to a very different approach. And obviously this government is very focused on balancing their budget, and that's what their entire campaign last year was based around. And so they really had to shift and say, how do we do this while we still balance the economy, and how do we keep Albertans safe at the same time? And so at the time of a enactment of state of emergency, through an order in council, the Emergency Management Committee of Cabinet was created. And so in that, they gave the Premier the complete ability to make any decisions necessary to keep Albertans safe. But then, of course, in the back of their mind, they're kind of having to shift to a borrow and spend mentality, which is definitely not this government's approach. And so in that, they've really had to, shift to, now it's in that, how do we recover the economy, and seeing now that that pivot, most of our economy is now open here, of course, with health guidelines in place. But in that moment, they really needed to make critical decisions around how do we keep, the Premier admitted that we're not going to be able to keep all businesses open, but they wanted to save as many jobs as possible.
And in Ontario, the government, more specifically the Premier, had sort of different set of political problems, namely his approval rating was very low.
Absolutely.
And then the pandemic hit, and talk a little bit about that, because this has really changed politics in Ontario with the Ontario government significantly.
Yeah, absolutely. And so in that, they, very similarly to Alberta, they went into state of emergency on March 17th, so just a couple days later. But touching on that, yeah, they had the creation of the command table, so very similar, but included public health officials in responding and providing strategic advice and leadership in, dealing with the crisis. For all of us who have worked in government, we all know what crisis mode is like, but this is an entirely different situation. And so touching on what you said around in Ontario, of course, I think that's been the most interesting to watch in terms of public opinion, and seeing how, he's really changed his public image entirely, and people have been very surprised by this. But I think it's because of the leadership that he's provided, and just he's been the clear leader on the issue. And of course, people may disagree on political views, but they've seen him as handling the crisis quite well and being able to make that impactful transition and pivot into this mode, and keeping the people of Ontario safe and ensuring that that move forward appropriately.
Now, and you're talking about Premier Doug Ford, of course, and how it just completely changed, I think, as you say, his public perception. All governments, federally, provincially, they went into the new year with a set of priorities that all had to be completely rethought. And in Ontario, obviously, the Premier took advantage of a crisis to show leadership. I think people would agree with that. Emilie, in Quebec, too, the Premier really did become the focus of things. And I want to shift now our discussion to how it's changed government decision-making. Obviously, governments are complex organizations. There are many people typically involved in the decision, in setting up priorities, execution on those priorities, and making decisions to deliver on those priorities. And yet in a pandemic, the imperatives become very few, and the decision-making process has radically changed. Talk a little bit about how that process over the last 14 weeks has played out, and how it's different than it was before.
Yeah, so in Quebec, as in other provinces, there was a declaration of public health emergency that gives a lot of powers to government and actually cabinet to make decisions and implement orders and adopt ministerial orders as well. So because of that, the way the decision-making process was during the duration of the declaration of a public health emergency, the mechanics completely changed. And also the National Assembly was not sitting. So it was basically concentrated into two main figures, Premier Legault, and a totally new figure. So someone that nobody knew before, that's Dr. Horacio Arruda, who's actually the National Director of Public Health, who became a very strong man in the decision-making process, because every time that Legault would make an announcement, he was definitely relying on Dr. Arruda in terms of supporting his actions. And so because of the shift from more activity in the National Assembly to a very small group of people actually making decisions, we've seen a very sharp increase in lobbying the government, in one-on-one conversations with ministers, with key ministers that are.
You mentioned to me earlier that the Premier has himself personally done almost an unprecedented number of stakeholder meetings with external non-government stakeholders. Does that talk about that?
I would say he was very much hands-on in the whole process. And so a lot of people were actually looking for some very short time to have with him or people close to him. And so there was basically a few ministers that were very close to at the center stage of the decision-making process. And that's definitely a change for a lot of stakeholders who were more into the step-by-step type of approach. Now they had to really speed things up, I would say, in terms of getting their message out and about. So.
Right. Now, Paul, we heard Ian earlier and Alex and Chris talk about the various things that the government did to address the pandemic, and talk a little bit about those decisions, because they, to my mind, were made remarkably quickly. I mean, typically for governments to make decisions around, wage subsidies or sort of tax deferment, the whole revamping of the way CRA was going to manage things, these are typically unprecedented, massive decisions, and yet the government actually was able to execute on them within days, or weeks. Talk a little bit about that, and talk about how the decision process, from your perspective, has changed federally.
Yeah. So when earlier I said that there was a strategy of containment for, physical containment within Canada from the federal government, you have to sort of apply the same thinking to a strategy of economic containment, because there could be sort of an economic contagion that could happen. And so the responsibility of the federal government was not just simply to throw every sort of potential measure that they could consider, they could think of at the economy, but to do it very quickly. And that means that you don't follow the traditional public policy process that you rightly pointed out. You're not going to be doing the economic analysis up front. In the
But who
background.
are you consulting? I mean, was there consultation? Was there stakeholder consultation? Typically, yeah, go ahead.
Typically, the stakeholder consultation will happen well in advance of introducing these measures. There was stakeholder consultation, but it was so quick and so brief that you had to have access to senior ministers immediately to be able to communicate those decisions. But there was stakeholder consultation subsequent to that. And so that's why we saw the federal government, coming out quickly, as fast as they possibly could, to reassure people that they would have measures in place, and then over time slowly working to refine those measures to make sure that they're more appropriate. And we're seeing the same thing take place right now. You can see it with the extension of the Prime Minister's announcement of the extension of the CERB benefit, that they are going to now include in that an attestation, essentially asking individuals to then be looking for work. In that sense, there are some elements of it that kind of make it like employment insurance, but that's to facilitate a new public policy goal, that they want the CERB benefit to be there for individuals who need it, but at the same time, they don't want that to stifle individuals' return to the workplace, which has been one of their primary goals right from the outset.
Right. Now, Taleesha, I suspect that the changes of what Emilie and Paul described in Quebec and federally probably at a high level apply to Ontario and Alberta. But talk to me a little bit about in Alberta. Again, as you said, I mean, dealing with these massive crises. Was it really now bringing in the sails and having really the Premier's office in Alberta become the nerve center for both setting priorities and executing those decisions? And how, from your vantage point, have non-government stakeholders been trying to engage and access the government and influence what the government's doing?
Yeah, absolutely. So interestingly, Alberta's taken a bit of a different approach. And in that, I would say decision-making processes did not change significantly in that, in the sense that the Premier's office is very much always been kind of a centralized decision-making, and things always seem to...
So it was a continuation.
Exactly. Of course, having to pivot in terms of the public health crisis that we were facing, but in that the priority became, again, saving jobs. And they actually continued sitting in the legislature and passing legislation, and still are, unrelated to COVID. And so there definitely has been less stakeholder consultation, as is happening across the country in a lot of jurisdictions. However, I would say it's kind of been... the centralized decision-making has remained out of the Premier's office. Of course, like Quebec and Ontario, new figure like the Chief Medical Officer of Health, they have emerged and been part of that process. But I would say that the preoccupation of the government became a balancing of that economy and public health.
Right. Now, Ian mentioned in his presentation that it was something that we've talked about in our group, this sort of government by press release. And in your practices, how have you managed that? A press release, a ministerial statement, is not law, it's not regulation, it's not binding until it is law and regulation. Paul, what from a federal point of view, and I'm thinking here also just around so many of the travel restrictions were sort of announced and then orders in council were passed. How did that impact your practice? How were you managing and dealing with clients in that environment?
Well, the unfortunate reality is that as lawyers, we always like to look to an actual legal instrument. We like to look to a statutory instrument, and this is just a function of what we do. We need something in paper to point to and say it has the force of law, otherwise it can't be. Unfortunately, in this circumstance, that's not the way you can actually operate, because once the government begins communicating these decisions, you need to operate on the basis that it's correct. The problem is when the government is announcing these things, they're communicating them to the public. And so they're communicating things in a very broad, non-technical way. And if you are a lawyer who then has to advise people on government decision-making from a lobbying perspective, you need technical details, because it's the technical details that ultimately determine whether you can do what you want to do. Right. So that has been the inherent tension that's made it so difficult. But the starting point needs to be that you need to be constantly monitoring and refreshing and understanding what the government is saying, so that you can then work around the clock to figure out and find, by whatever means possible, find out the actual details that you then need.
Emilie, you were dealing with this a lot in Quebec. I know that because we were on a lot of the same calls. Talk a little bit about that in Quebec, what the dynamic was and how you were managing it.
Yeah, I would say it was a bit tricky at the beginning, especially with the suspension, because as I mentioned, it was so drastic that a lot of stakeholders were looking to clarify whether or not their business was actually in the list of priority services maintained. And so depending on who you were speaking to, and of course, as Paul mentioned, as lawyers, we're looking at this as it's an order in council. We have to interpret it in accordance with previous precedents, case law, the intent of the legislator. But then they would go and ask a staffer what they think. Oh, do you think my business can be on the priority list, or is it included? And then there was all sorts of various interpretations. So at the end, I think the suspension was long, but maybe it felt longer than it actually was. So a lot of precautions were taken by clients, and they were more inclined to just suspend until further clarifications. But I agree with you. At the beginning, it was kind of overwhelming to receive all those questions of interpretation and not having much to interpret them with.
That's right. And even when the orders were published and the rules were available to us, there was ambiguity. And I guess one of the challenges that we encountered fairly regularly was, how do you resolve ambiguity on newly passed regulation when the government is not that 100% sure about its own regulation because it's been made in haste, and then secondly aren't really equipped to deal with the deluge of calls and inquiries that they're going to get from our clients and from Canadians and provincial citizens over what does this mean. And at least in Ontario, I would say, Taleesha, you'd be aware of this, is there was a bit of a shutdown of communication. We weren't going to be in the business of explaining to everybody whether and how the rules applied to them. They sort of sent you to a 1-800 number, and the person there, lovely person though they may be, was not equipped to answer the questions that were being posed to them. And so it was in the case of the construction industry and a couple of other industries in Ontario especially, there was a lot of behind the scenes lobbying to get clarification so that the companies could make informed decisions about what they were doing. And we saw that in a couple of areas. Let's turn now to the future. This is the fun part, because of course, we'll be able to look at this in a few months and decide whether our prognostications about this are correct or not. But what do you see happening now that we're returning to, I won't say the new normal, but essentially we as citizens, companies, and governments are now having to figure out how to live with COVID. I think most people, optimists will say we might have a vaccine in 12 to 24 months, but a lot of realists think it could be a lot longer than that. And and we may never have a vaccine. And so we're in a world, well, how do we now live with COVID? And I guess the question for me is, do you have any sense of how your government, the governments you're talking about, how they're going to live with COVID? Taleesha, do you have a sense of what the Alberta government's going to try to do to return to some semblance of normal for the way that they conduct themselves?
Yeah, I was going to touch on this because I think it's really interesting to see the contrast of how different jurisdictions are focusing on this, and some are taking a more cautious approach, and some are taking a more, move ahead with a reopening. And so, as I mentioned earlier, Alberta has almost reopened, except for things that are, large gatherings, and so we're already in stage 2 across the province.
Is the legislature sitting again, or is it not resumed?
Yeah, they are.
Okay.
Yeah, so they are, and of course with constituency weeks and break weeks in there. But so even from the very beginning, Premier Kenney said that he was going to follow the how other countries have handled this were hit by COVID previously, and said that we're going to have to, especially given the situation here, we're going to have to balance a reopening of the economy with the potential for a second wave. And so that's kind of what we've seen here throughout the process is a cautious approach in that they didn't reopen for stage 1 of the plan in 2 different areas, Calgary and Brooks, because they were hit the hardest. And so there has been a cautious approach, but also a approach saying we really need to get our economy moving here, and we need to get things going, especially given the situation here. But there's that, if there's a second wave, how do we not completely shut down our economy and ensure the health of our citizens at the same time?
Yeah, and will governments even they'll have the legal authority, but will they have the persuasive ability to convince businesses and individuals to, move in a direction of more containment should we have a second wave? I think that is going to be a big question. I know it's being talked about in the media, and of course for us, who interact as we do with decision makers and politicians on a regular basis, this is something that's certainly on their mind. Paul, in the month before the pandemic, you and I were working on some client issues in Ottawa, and we were preparing with our clients for doing in-person meetings. Are we going to be? Am I going to be heading back to see you anytime soon? And are we going to be doing in-person meetings with government officials or politicians in the foreseeable future?
Well, never say never, Dan. I mean, I would love to see you. Believe me, it's not quite the same interacting like this by means of telecommunications. You're very gregarious in person, but I think we have to sort of settle in to get used to the fact that I think just by its very nature, business customs are going to change. And as business customs in terms of how individuals interact with each other in all types of business environment change, so too will be the way that governments interact with public office holders. And I think this is something you need to be very aware of as a lobbyist or as government relations specialists. We're going to have to think of ways to enhance or build those personal relationships beyond the ways that we used to by simply going in and meeting somebody face to face, because you can't replicate that interaction. When you're trying to persuade somebody, you need to find ways to build that personal interaction. So, as much as these forms of telecommunications are going to be helpful, we're going to have to find new ways to supplement that. Right.
Emilie, in Quebec, what do you think is going to happen next? There's a question for you. What's going to happen next? What's going to happen? Is the government settling into a way forward, or are you sensing that there's a strong drive to get back to the way things were?
Well, I think there's definitely a strong will of the government to get people to work, actually. I think the focus has really been on restarting or a recovery, an economic recovery plan. There was an attempt to have the principle of Bill 61 adopted last week, and it did not. So the government was not able to get the opposing parties to actually debate on the principle of the bill. So I think we can see that intent to, now that the National Assembly adjourned, we can see that coming back in the fall. This will definitely be the focus of the government in terms of how they do business or how they interact with stakeholders. I think we're going to see a lot of what we've been seeing during the pandemic continue, which is more smaller groups or focus groups. They work a lot on action plans, so very concrete actions that they want to see. And I think this is more the way of doing or the governance way of this government more than maybe the pandemic, but I think it has just crystallized maybe the culture that they have brought to government.
Okay, I'd like to put you, we're going to wrap now or soon. I'd like to put you all on the spot. First to you, Paul. Like, so we have a minority government in Ottawa. What final thought for people participating in this webinar today? What is your big thought about if you are an individual or a company that has significant exposure to government decision making, or just generally interested in way governance? What's your one takeaway you'd like to leave people with?
I think the question that people need to consider is whether or not a minority government or the federal government is going to be able to return to focusing on its political priorities before the pandemic anytime soon. I think a lot of people want to say it's a good opportunity to try and tie your strategy in persuading them to previous political priorities. My view is that the only measure that the government is going to be judged on, and the only one that they're going to be concerned about over the next 2 years, is the way the efficacy of their economic recovery plan, the same way the Harper government had in 2008. That was the sole focus of judgment. And I think everybody needs to sort of brand their asks, their requests, and their plans based on that.
Thanks. Taleesha, what about you? What's your takeaway thought?
No, absolutely. I agree with Paul in that I think governments are going to be more strongly criticized for how they handle the recovery plan than they are for the public health crisis. And I think it's important, if you do deal with government, for our attendees here, that you set yourselves up now for a post-pandemic government relations strategy. So if your issues are not related to COVID-19 and you've had to take those off the table for now, set yourself up now well for that, and build those relationships across government and ensure that you are ready for that time. And in addition to that, if you do have issues that you need to address now that may not be related to COVID, find the people in government who are not swamped with COVID-19 pandemic recovery, and find those people and try and move your issues forward in that way.
They might welcome the call or the Zoom call, as the case may be. Emilie, you get the last word. What's the one important takeaway for people on the webinar today?
Yeah, I think I'd go with the group. I would say if you can attach your issues or your concerns to anything that relates to a relaunch or a recovery plan, that's a restart of the economy that can bring something good for actually the government to have to announce, that you be part of their recovery strategy, there's of course more chance that your voices will be heard. So that's what I would say.
Okay. Emilie, Taleesha, Paul, thank you very much for this. It was a lot of fun. Great to see you all, and nice to have a conversation about, at a higher level, about the things that we do, think about, and worry about every day. So thank you for participating. And Stephen, if you're there, we're done our panel discussion. Not sure if there are any questions, but happy to answer questions or a sign off. We're in your hands.
Thank you, folks. That was great. There are no questions from the audience, but I have one, and it touches on a couple of things that have been referred to during your chat, which I thought was very helpful. The first is, do you think for our clients in the automotive sector specifically, do you think that there's going to be a more relaxed approach to regulatory issues that affect the automotive industry post-COVID, while the government regroups, while bureaucrats get caught up on whatever they had to do? Are we going to see a bit of a lull, or can we expect perhaps that there's going to be less scrutiny? Number one. And my second question, which is to touch on something that you and Paul and Taleesha in particular have mentioned, for those clients who have the practice of keeping in touch with their regulatory colleagues, their bureaucrats, to maintain a good rapport and keep the channels of communication flowing nicely, is now the time to start calling people up and saying, we want to chat about things? Or is that something that should wait, or should it be done differently than it's been done before, for example?
So Stephen, you've asked two questions. The second one is easier than the first one, so I'm going to answer the second one. and I'm going to give my colleagues plenty of time to prepare to answer the first one. So the second one is, yes, now is the time. There's no point in waiting. As I said, we need to now learn how to live with COVID. Governments have turned their mind to figuring out how to live with COVID. All businesses are thinking about and planning for, hopefully, some kind of return to work, return to normal strategy. And governments are doing that as well. And so it's a phone call, but also these, people's facility within government and outside government for these video chats, these video conferences has gone up significantly. I mean, as you know, we as a law firm have been doing a lot of this sort of communications, both amongst ourselves, but also with our clients and with our broader community. And that's true for government officials and politicians as well. So the idea is you reach out, identify people. Now is the time to remind them of your issues, remind them of your interests, remind them of what you can offer the government as the government thinks about how it does, launch a recovery. You may have a very positive story to tell. I know the automotive industry will have a very strong and positive story to tell federally and certain provincial governments about the contribution that it can make with the right kinds of support and the right kind of help. So I would say do it now. Phone calls, emails, and don't be shy about suggesting a video conference on a Zoom or whatever platform you're comfortable with. I know governments are using different platforms, and there are many out there. So now is the time. And as Taleesha said, think through where you and your issues fit with the government's evolving agenda. The focus is going to be on recovery, for sure, on recovery, but not all of the legacy priorities have gone away. And we've seen this from the federal government. Climate change, fighting climate change is going to continue to be a priority for the federal government and is going to play a central role in the decisions they make around how this, from a federal point of view, how this recovery should play out. One example is we know that they have delayed the decision on the low carbon fuel emission standard policy that they've been working on, but that's not going to be delayed indefinitely. And it's still a live issue that's being discussed and considered within the federal government. So that's my general response to the second question. Now to the first question. Maybe first you, Emilie, thoughts for the automotive industry on the role it can play and what its messaging should be for governments?
Well, I think, and I'll touch on maybe a bit of the federal ones that I know about the emissions, especially. So everything that we've seen has been postponed in terms of regulatory processes, so federally and also at the provincial level. So I think it's going to be, it's important to know about the main areas of interest of the governments, the focus. So for example, the Quebec government, since the very beginning, they were focusing more on small and medium-sized enterprises, more on a Quebec-based type economy. So there's a lot of that in the conversation with the Quebec government. So I think the automotive industry needs to find its way to fit in those conversations. So and not to think that because something was postponed due to COVID-19 that it's not going to come back. So if there's something that needs to be conveyed in terms of the messaging to the government, I think now is the time to prepare for a relaunch of those conversations.
So the regulatory discussion. Go ahead, Paul. Sorry.
I was just going to follow up on that, and not, Emilie points out rightly, just to think something has been postponed doesn't mean that it's not going to come in at some point. But at the same time, I would say, since something has been postponed, don't possibly miss out on the opportunity to consider that an opportunity to then make changes to it subsequently or refine it going forward. Sometimes these when regulations are being developed, they have to do impact assessments of them, and they have to do it based on a certain political and economic environment. But the economic environment has completely changed, and that environment changes it for an entire industry. And so as regulations that may have been expected to come into force are sort of pushed off into the future, you may want to consider how the changed economic environment may actually itself be reason to help the industry maybe craft or change those regulations going forward.
Yeah, I would agree. And I think it's going to be interesting just to see how, especially in Ontario, with there's 300,000 jobs in the manufacturing sector there and 125,000 in the auto sector alone. And so I think it's going to be interesting to see how across industries, but especially in this sector, how it changes. And I think automation and AI was already becoming, something that was coming into effect, but I think it's going to, this is going to increase the pace of that dramatically. But I think companies and manufacturers need to ensure that they're still following, the regulatory approach that the government takes. It may happen slower, but ensure that you are following the steps that they've put in place.
Geez, I almost feel like I'm going to miss these daily news conferences by politicians and public health officials, but I actually won't. But anyway, Stephen, back to you.
Okay, well, thanks very much. Appreciate it very, very much. That was excellent. We have one question I'm going to lob back to Ian. If an employee is laid off, terminated, or terminated, and given a continuing pay severance package versus a lump sum, can that employee claim the emergency benefits? And can the employer continue to claim for that employee?
Okay, so I'll limit my comments specifically to a termination scenario where the employment relationship is being ended as opposed to a temporary layoff. But let's assuming you're severing a relationship with somebody and you're providing them with some sort of severance package or termination package. How you structure that package will matter, both for the purposes of the employee's CERB eligibility and for what, if anything, you're going to be able to claim under the wage subsidy program. So I'll deal with the employee part first. If you get you're not eligible to claim CERB if you're still on a payroll and receiving payments. And so if you're in receipt of income, then you're not going to be in a position necessarily to file a claim for CERB benefits until you're removed from the payroll and no longer in receipt of income. If you receive payments by way of a lump sum, then you may be eligible to apply during the next benefits window, depending on certain income eligibility criteria. So there is a structural difference there, small as it may be, in terms of what the individuals may be entitled to. From a wage subsidy perspective, if you pay out a lump sum severance package, you're not allowed to claim subsidies for that. That's a retiring allowance, and retiring allowances are clearly excluded from the eligible income you're able to claim under the wage subsidy program. There are some employers, however, that are, in recognition of the fact their business is changing, have decided to give people who are at work and working notice. They're asking them to continue to perform their jobs, but they're giving them advance notice of the fact that their relationship is ending. And in a situation where somebody's still working, still being paid regular wages, all of the same payroll taxes and deductions are being remitted, then there's not necessarily a bar, as I see it, to the company continuing to claim a wage credit in respect of wages for work actually being performed. And so that may be a situation where, in certain limited circumstances, you could claim a wage subsidy in respect of payments that are also counting towards potential termination notice or other sort of end of employment related obligations. But it's a delicate area, and I think it's one that you need to be careful with, especially if you're dealing with situations where you're terminating people who are on layoff and not actually at work on the payroll. It will look kind of funny if you're saying, we're recalling you to work only to fire you, but we're going to pay you out as a continuance. And then we're going to try and claim a wage subsidy on it. I think that might put you in a situation where the true method of what you're up to will be readily apparent, and it may not be well received by the government in terms of the intent.
Great. Thanks, Ian. Well, I want to thank everyone for being part of this webinar. I want to thank our panelists. I want to thank those of you in the audience who took part in it. Obviously, we're very proud of our multi-jurisdictional practice group that stretches across the country and has a national reach. And you see that reflected in the speakers that we had today and the topics that we were able to talk about on a variety of different issues and practice groups and affecting different parts of the country. We would encourage you, if you have any questions, to reach out to me or to any of our panelists if you want to engage further in discussions about some of the things that we talked about. I want to thank you again for being part of this. Please fill out the survey questions by clicking on the survey button. And most importantly, to you and your employees, be safe and be well. Thanks very much.